The markets are falling, the rupee is correcting against the US dollars. There is negative news everywhere. But it's important for us to stay sane and take the right direction. And there are some basic steps which we can do, irrespective of whether we are risk takers or risk averse investors. So, here are 8 basic steps which we can do to move in the right directions. Number one on this list is closing your loans. If you are a risk averse individual and cannot handle volatility, close your high cost loans. When markets are struggling and you have a bulk amount to invest, prioritize in clearing these loans. For the adventurous investors, remember what you missed in 2020 during the COVID times or 4th of June during the election results when the markets crashed. You told your friends that, oh man, I missed that opportunity. Do you want to say that again when the markets rebound? Number two on this list is no big ticket investments or expenses. Avoid putting large sum into a single investments until there is a clear market direction. The same goes for big expenses. Delay them as much as possible, especially if you are risk averse individual. Expenses delayed equal to savings made. At the same time, if you are a risk taker, remember the last time you sold off your portfolio because it went down because of a market fall. For once, if the fundamentals are good in your stocks, hold your portfolio and don't realize unnecessary losses. Number three on this list is do not stop your SIPs. Please understand SIPs are designed to work well in these falling markets. They average down your cost. So stopping SIPs during market falls is actually a ridiculous strategy. Watch this video on how I use this simple SIP strategy to achieve my goal. Number four on this list is tax harvesting. I take advantages of losses in my portfolio by offsetting them against my long-term capital gains. This way, I am optimizing my future tax outflows. Watch this video for more details. Number five on this list is prune your holdings. Almost every investor I work with is having lots of mutual funds in their portfolios. And see how many number of funds are being released by these AMCs. Folks, essentially you're holding an extremely costly index fund if you have way too many funds. Watch this video to know how many funds you really need. Number six on this list is goal-based investing. Instead of random investments, I ensure every rupee is aligned with a financial goal. This actually reduces emotional decision making. Number seven on this list is gold and silver as currency hedge. With so much of currency fluctuation, I consider gold and silver as hedges against uncertainty. So having a good portion of your portfolio invested in them is a wise choice. The final thought, instead of panicking, I see this as a time to optimize my finances, rebalance, and take advantage of opportunities. So what's your strategy during the market downturns? Let me know in the comments.